As you heard, the bank has held the key interest rate today. That was widely expected. But let's take in a panel of guests here to talk about this. We have Ed Devlin, founder of Devlin Capital, and then Paul Beaudry, senior economic advisor at Bennett Jones, former deputy governor of the Bank of Canada. Welcome to you both, and thanks for joining us today. Paul, I'm going to start with you. How difficult is it to plan or even project, given the U.S. administration's constant threats of tariffs and shifting policy?
Well, it's certainly very difficult. They kind of looking forward, trying to decide what kind of tariffs we might have going a year from now, especially as we're kind of going to renegotiate this CUSMA. It's very hard to predict how the Trump administration will approach that. Right now, we can take a certain view and hope that we can kind of get a reasonable deal, but it's very much hard to predict.
Okay. Ed, you manage money in a situation that has been pretty volatile for the last year. So what has it been like for you?
Well, actually, it's been quite positive for us because, the Bank of Canada has been cutting rates, which, has helped the performance of bond funds.
Okay. Paul, let me go back to you. Do you feel the rate is where it needs to be right now? And if so, why?
Well, it's, if we look at the kind of measures that we have here, first of all, one of the things that really came out from the monetary policy report that the Bank of Canada put out today, if you look at the inflation part, inflation is really under control in Canada. So that's really a good news after that high period of inflation we had going, 22, 23 through that period. Really, inflation seems to be under control. So now it's really kind of thinking, is the economy needing more help or not from the Bank of Canada? And I think with the rates at this level right now, the Bank of Canada thinks it's giving the right support. It's giving room to kind of think if it's not giving it, it can move on the other side. I do think at, unemployment still at 6.8%. And kind of growth only at 1%, 1.1% for next year. It seems like the economy needs an extra push, but a lot of that is due to structural factors. But again, I would see that the idea that this isn't bad, but if anything, maybe rates might towards the end of the year decrease a bit.
Okay, so let me turn that back to Ed. Ed, do you think the economy still needs help, given some of the factors that we heard from Paul? We have the unemployment rate higher, and the growth is kind of for this year.
Yeah, no, I would agree with Paul. I think that the bank's overall assessment, it's very hard because of the uncertainties, but overall I thought we were slightly optimistic. They'd upgraded global growth by 0.3 and U.S. growth by 0.4%. And so I would be in the camp that the risks are for a couple of rate cuts, especially since they don't have a lot of room to move with growth, as Paul said, around 1%. The thing that would be, I think, that's going well for them is, having Mark Carney as now the head of the fiscal agent as opposed to the central bank. I think what we saw with the announcements recently with rebates to the GST for relatively poor people, that's a very and front-loaded, very effective fiscal stimulus. So I think the bank is going to have a good partner with the government. If we do have weakness, using fiscal tools as well as monetary tools.
Paul, did you think that the GST credit, which will be upped, was needed? You said inflation is relatively under control.
Yeah, well, it's certainly helping. And so we really know there's some people that are really struggling with, high prices, especially of food and different aspects. And so the GST. What we do have to have an eye on is still the deficit in the case of Canada. There was really a kind of discussion in the last budget of saying, okay, we might make deficits for investment reasons, but when we cut the GST like that, that's not investment. That's really a spending. So there is aspects of trying to figure out, okay, what kind of package this government will want to kind of figure out in the long run to pay for some of these helps. This is a temporary kind of change in the GST, but once you put it in, it tends to stay there. So we have to figure out how we're going to pay for things like that.
Okay. I do want to pivot to the CUSMA renegotiation, which is supposed to happen this year. That's a big overhang. It's part of the uncertainty that we've all referred to. Ed, with that overhang, do you feel like you have to be ready to pivot if and when perhaps that doesn't happen?
It's going to be very tricky for not only market participants but policymakers and negotiators because it's hard to see a Trump administration or Donald Trump. Tariffs seem to be his favorite word and his favorite tool. So I can't see how he just gives it up. We renegotiate CUSMA and we never hear from him again. he seems to be, in the news cycle a lot. So I think we're probably in for a prolonged period of volatility on that trade front, and it's very unclear to me how it gets resolved. And our base case would be it really probably doesn't through his term, in which case I think there's probably more risk of rate cuts, and it's probably good to be overweight bonds.
Okay, Paul, let me turn it back to you. Do you think that there will be a renegotiation? Does it even matter if there is? Because picking up on what Ed had to say, whatever happens, on one day with Donald Trump isn't necessarily what he's going to follow through on the next day.
Yeah, but still a renegotiation would really help. Like if we look at what happened in these kind of more recent times, it still is that for a lot of the goods that are CUSMA compliant, we do not have tariffs on them. And so there's still been not a full respect of the agreement we had, but quite a bit of respect for it. And I think the same thing going forward. It's not the same kind of done deal, even if we get something, but I think getting something would be better than not. And especially if we can get this agreement to cover at least all the goods that kind of right now are not over tariffed to continue, that would be really helpful. And that's under the Bank of Canada's forecast for growth. Kind of assume that as kind of its baseline. So everything else is kind of a loss.
Okay, but what happens if we get tariffs, even if they're sector specific, even if they're higher on the sectors that are already being tariffed right now? Ed, I'll start with you on that.
Well, I think it's just going to increase uncertainty. It's going to dampen consumer and business investment, and it's going to be a significant headwind to the economy. So I think it's just that simple. It's just not very positive.
Paul, what about you? If we get tariffs, even if they're limited in nature, how much damage could they do?
Well, I think you really have to figure out what we mean by limited in nature. Getting that quantitative aspect is really important, figuring out like how big are the sectors being affected, how are they affecting, how their general view of the uncertainty associated with that. So yes, there might be some small sectors that are kind of affected. That's really difficult for those sectors, but might not matter for the overall economy. So I don't think it's a black and white type of thing. You really have to get into the details and see what's going to be affected and where and how much it affects really the consumer confidence, which is really the thing that's been holding up the economy right now.
I do want to ask quickly what you think as a catalyst for a better year this year, because we don't know what is to come from Washington. What could act as a catalyst this year for the Canadian economy? Paul, I'll start with you on that one.
Well, a big part is exactly, we've already discussed it. So the CUSMA kind of having some certainty in there would be really, really the great aspect there. It would make a big difference. But other things, as we'd see, there's a kind of theme that's been in the background with the Carney government of saying, big projects are going to go in faster. There could be that change in atmosphere of really getting in some of those investments, putting them in and getting things through. And that could really help as we're trying to have trade kind of expand for other countries through this year.
All right. Ed, anything you could see as an outside catalyst that could help the Canadian economy this year?
Yeah, I think good fiscal policy. Personally, I think these investments in infrastructure probably aren't really going to hit the tape this year. They're kind of longer term in nature. And I'd hope that the government, promotes more, kind of tax reform that's focused on capital formation and business formation to really kind of unlock, the domestic Canadian economy. If we saw anything moving in that direction, I think that could be a real catalyst.
Got it. Ed Devlin is the founder of Devlin Capital. Paul Beaudry, Senior Economic Advisor. Bennett Jones, former Deputy Governor for the Bank of Canada.